Very good evening to all the esteemed members of our esteemed profession, all the esteemed panelists for today's ICSI celebrating the Secretarial Standards Week. It gives me immense pleasure in inviting each and every esteemed members of our profession to the webinar on the guidance note on CSR and celebrating the ICSI Secretarial Standards Week. Once again, a very good evening and a very warm welcome to each and everyone, and more so to the expert panelists and the participants who have taken their time out of the busy schedule to attend this 6th webinar session of Secretarial Standard Week being celebrated by the Institute from 18th to 24th of April 2022 on the theme Decoding the Secretarial Standards and Guidance Note issued by the ICSI. Friends, today, while we are going to decode the aspects covered in the guidance note on the corporate social responsibility issued by the ICSI, we have received an overwhelming response from all the professionals of ICSI and also our esteemed guests that this webinar series organized by the ICSI during the Secretarial Standard Week is indeed a marvelous one, and it has been appreciated by each and everyone. I am sure that our members will continue to provide similar support for all such initiatives initiated by the ICSI. Friends, at this occasion, I would also like to congratulate all our regions, Eastern, Northern, Southern, and the Western region of the ICSI for organizing physical programs on decoding the secretarial standards and the guidance note issued by the ICSI in their respective regions. Friends, the credit of the success of this Secretarial Standard Week goes to the ICSI leadership and more so to our beloved President CS Devendra Deshpande, our beloved Vice President CS Manish Gupta for timely introducing these initiatives for propagating the qualitative standards guidance notes issued by the ICSI and our expert panelists who are very well articulating their best practices and benefiting the adopting them in letter and spirit. Friends, on the topic for today's session, I wish to share a brief background as to why this guidance note on CSR is issued by ICSI. The philosophy of giving back to the society has been an integral part of the Indian culture and ethos, which has also been imbibed in traditional Indian businesses since time immemorial. With the enactment of Companies Act 2013, the corporate social responsibility has become a norm for the corporates in India. CSR provision enshrined under the Act, being a unique provision of law, listed India among one of the few countries in the world where CSR is mandated under the statute. Introduction of the CSR provisions under the Act was a significant legislative effort undertaken to evolve corporates as partners in the social development process of the country and in strengthening the social responsibility of businesses. Also, the recent amendments brought into the CSR provision have significantly evolved the legal framework of CSR. After considering all these developments, it was felt that the effectiveness of the CSR framework adopted by the organizations can be improved to a large extent by addressing the legal issues connected with the subject in order to provide much clarity to the stakeholders even before the Ministry of Corporate Affairs have come out with the frequently asked questions on the subject. That your esteemed institute has issued a comprehensive guidance note on CSR, which I am sure is of practical relevance to all those who are entrusted with compliance of corporate social responsibility provisions. Friends, the topic of the CSR is not only relevant for the professionals in employment, but also to the practicing professionals as they are entrusted to certify certain aspects. Hence, I wish to spend few minutes of how practicing professional should be cautious while certifying CSR related compliance or otherwise. Practicing professionals while certifying compliance such as CSR1 form shall verify the details of the company, entity related documents, and undertaking from the entity and confirmation from the company may be taken on record by the practicing professionals. In case the entity is not established by the company or group company, then checking the necessary documents to verify the track record of 3 years of such entities. Examples like audit financials, date of registration of the registration under Section 12A and 80G of the Income Tax Act, the details of CSR project spent, the details of the CSR project undertaken by entity, and so on and so forth. The practicing professional should also obtain an engagement letter from the entity before certification and should thoroughly verify the documents to satisfy about the contents of the certification. Wherever required, UDIN should be generated giving any such certification. Friends, without much delay, I'm sure you're all eagerly awaiting to listen to our esteemed and learned panelists of our profession. And it's now time to introduce expert faculties. But before I introduce them, there may be many questions which may be coming across us regarding applicability, regarding the accounting practices, regarding the taxation aspects, regarding the utilization, regarding the utilization certificate, regarding the mode of disbursement, the various administrative overheads, the role of the company secretaries in this particular CSR, the reporting, the disclosure requirement which is required, as well as what are the various action plan and the role and responsibility as a company secretary as a whole, as a key managerial professional, as to in case what happens in case there is any delay, or in case how to account for the unspent amount, and so on and so forth. I'm sure all the expert faculties who are present today are going to shed the various aspects, especially the practical nuances which we all professionals are going through. Let me first introduce our beloved CS Satwinder Singh. He is a Bachelor of Commerce, Bachelor of Law, Certified Associate of Indian Institute of Bankers. He is a fellow member of our esteemed institute, and is also a registered insolvency professional by the Insolvency and Bankruptcy Board of India. Mr. Satwinder Singh heads the Vaish Associates, a corporate firm at New Delhi, a lawyer by profession. He is also a qualified company secretary. He has over 28 years of experience and has been associated with the firm since February 1998. He has an extensive experience in handling corporate law matters, acting as a legal advisor to various types of public offering, drafting, negotiation, commercial agreements, and so on and so forth. I would also like to mention that Mr. Satwinder Singh has recently been appointed as the member of the Appellate Authority constituted under the Act governing 3 institutes, the CA Act, the CS Act, and CW Act wide MCA notification dated March 25, 2022, issued by the Ministry of Corporate Affairs, Government of India. He is also the chairman of the expert group on the secretarial standard, and the list goes on. But one thing I would like to mention about Sri C.S. Satwinder Singh ji is he is a passionate reader, and he has got the passion towards the institute. Any time, even at night, 12 o'clock, 1 o'clock, you ring him. He is always there, smiling and giving solution and to the institute. Sir, we welcome you to this webinar on the Secretarial Standard Weeks on Corporate Social Responsibility. The second speaker, we have C.S. J. Sridhar, our own esteemed past president of ICSI, who is a company secretary and vice president of Bajaj Auto Limited. He is having multifarious qualification of PhD, Chartered Accountant, FCS, and LLB. He is a commerce graduate from Madras University and a law graduate from Bombay University. He is a diploma holder in business management and master's in management science from Symbiosis Institute of Business Management, Pune University. He is an alumnus of Indian Institute of Management, Ahmedabad, having completed a senior executive development program. He has done his PhD from Savitri Phule, Pune University in financial management in the subject of CSR. He was the chairman of the Pune chapter as well as the Western region of ICSI, and also he has served the esteemed post of the president of the institute in the year 2000. Sir, we once again welcome you to this session on Secretarial Standard Week and also on the topic of corporate social responsibility. Now, it is my task to introduce Sri Sanjeev Grover. He is presently the Executive Vice President and Company Secretary of Maruti Suzuki India Limited with over more than 25 years of experience. His role includes advising the boards, committees on various matters, including corporate governance and restructuring, implementation of various policies under the listing regulation, overall supervision, mentoring, guidance on the corporate secretarial division, compliance various laws, listing regulation, FEMA, FDI, takeover, and many more things, and specifically advisory role to the JVs, associate subsidiaries, and Suzuki Motor Corporation. Sir, we welcome you to the Secretarial Standard Week on today's webinar on corporate social responsibility. Last but not the least, we have the young dynamic CS Pramod Kumar Rai, our own fellow member of the Institute of Company Secretaries of India, a law graduate from Delhi University with over 25 years of experience in the corporate sector. He is currently the Associate General Counsel and a Market Compliance Officer of Nestle India Limited. He heads the Corporate Legal Secretarial Governance, Compliance, and Investors Relation function. He is associated with Nestle for over the last 17 years, and before Nestle, he worked in the packaging and automotive industry for over 8 years, leading the legal, secretarial, insurance, audit, and investors relation function. He has been the regular speaker at the various programs of NIRC, ICSI, SOCM, NISIM, and also the faculty of MSOP sessions conducted by the ICSI. I once again welcome each and every one of you, and to also our Pramod Raiji to this session. I now invite our first panelist, our opening batsman, CS Satwinder Singh Ji, to deliver his address and also to make his presentation about CSR, applicability, and many more things. Over to you, Satwinder Singh Ji.
Thank you, Mr. Nagendra Rao, for such a kind introduction. Maybe whether I deserve it or not, but thank you so much for giving me this nice introduction, and I welcome all my co-panelists for this CSR, and I welcome all the members who are attending virtually, and I'm so happy that we were striving for the advocacy of the sectoral standards, and the president, Mr. Devinder Deshpande, he took it immediately, our suggestions, and said that no, we will take it up the sectoral standard week, and we can now witness the kind of response which we have received. I have been told that more than 8,000 members had joined on the last 5 weeks every day. I think it's ranging from 6,000 to 8,000. I think on that SS1 and SS2, we had the attendance of more than 8,000 members, but in any of that event, that it is not less than 6,000. So huge success, and I owe this success to the president, vice president, and to all the members and the expert group members who have really spent a lot of time even on coming out with the sectoral standards, the guidance note on this issues, which we had discussed it in the inaugural session also, and to the members for their encouragement, and which will definitely make us to work more on the different aspects which the legal issues which are arising for this. I think the one aspect which we are taking it up on all that 7 days, we are discussing on the different topics which we have already come on the guidance note or the sectoral standards along with the guidance notes. And this is one of in the last leg of the guidance note on the corporate social responsibility, which I have been given a pleasant assignment to open it up with my other colleagues on the panel, and I'll just take it because this is where I feel that the corporate social responsibility, one section in the Companies Act 135 with 2-page rules and probably hundreds of interpretation on those rules which are coming, has seen it. I being you see in the advisory role in this, probably I myself would have issued more than, if not more, 20 opinions on the CSR. But as I you have rightly mentioned on that panel, we have discussed with each other on the issues, because that section itself, along with the rules, if I divide the different subheads of this, I think now we can talk about on the applicability, we can talk about on that implementation, then it is on the unspent amount, we are talking about on the administrative overheads, then there are provisions with respect to surplus and set-off also. There is a elaborate now provisions with regard to CSR committee, including the enhanced responsibility of the board and CSR committee, reporting and disclosures, the issues with respect to the creation of capital assets and whether it will remain in the books of the company or not. And last but not the least, if I would say, is the impact assessment, which we are taking it up. I think I have the exhaustive presentation, but before I take it up, we thought that, okay, I can take up the legal issues with respect to the applicability and implementation. And since the time is given for about 20 minutes each to each of the panelists, and then we thought that, okay, we can have the question hour session, because I expect a lot of questions coming, which with Dr. Nagendra Rao, Mr. Nagendra Rao, President Saab, will take it up with the panelists, and we'll be happy to answer those questions on that issue. So let's discuss with this. On 22nd January 2021, I think that the notification again came with regard to the CSR amendment rules, and these rules were notified, and the amendment laid down the framework to support the changes in the CSR provisions introduced by the Companies Amendment Act 2019 and the Companies Amendment Act 2020. Now, which I said that, okay, these are the issues which we can take it up. But if I can see the key highlights of those amendments, some definitions have been modified. There is a concept of implementation agency, and there is a registration requirement for implementation agency. They introduce the provisions with regard to ongoing project and impact assessment. And rather than, there is a complete shift from the comply or explain model to comply or penalty model for this. And then the issue with respect to carry forward and set off of CSR expenditure, which has been allowed, that has been taken it up for this. Cap on maximum administrative overheads, which my other colleagues will definitely discuss. Additional responsibility on the board and management, creation and acquisition of capital asset reporting requirements that have been increased, that we have discussed it. But let's look at the applicability of CSR. Now, if we look at it, every company having a net worth of INR 500 crores or more, or turnover of 1,000 crore or more, or net profit of INR 5 crores or more, during the immediately preceding financial year, shall constitute a corporate social responsibility committee consisting of 3 or more directors, or out of which at least one director shall be an independent director. So that has been taken it up. In any case, that issue where there are, so if I segregated with this thing that, okay, if it is a listed company, that will be applicable. If it is an unlisted public company, probably if there is an independent director, well, if it is not there, then 2 or more members of that. private companies, and it would be applicable to such class of companies as it considered necessary shall comply with such directions. Now, if you look at it, the change which has happened earlier, it started with this profit of the same criteria during any financial year. Then there was this that, okay, how we can say during any financial year. Then because of the different interpretational issues, they amended it by circular in 2014 that it is any of the three preceding financial year. Now with that amendment act, it has been taken it up that it is the immediately preceding financial year this criteria has to be seen. Now if I just look at it from that angle, is whether CSR provisions will be applicable to such companies which has not completed 3 years since its incorporation? The answer is yes. Because if I look at subsection 5 of 135, it clearly says, or where the company has not completed the period of 3 financial years since its incorporation during such immediately preceding financial year. That means that you, even if it is less than 3 years of incorporation, you have to take it. Whether the companies can undertake any CSR activity mentioned in the Schedule 7 for the exclusive benefit of their employees, workers and their families. It is said that if I look at that rule, it clearly said that it is designed exclusively, if it is designed exclusively for the benefit of employees, it shall be considered as an activity benefiting and will not qualify as permissible CSR expenditure. However, any activity which is not designed to benefit employees solely, I think that's which we captured, we discussed it at length in the expert group solely, but the public at large, and if the employees and their family members are incidental beneficiaries, then such activity would not be considered as an activity benefiting employees and will qualify as a eligible CSR activities for that. There are amendments in the provisions in the definition of corporate social responsibility, and where they have provided to this is the activity undertaking. So there is exclusion provisions that which are the activities which will not fall within the definition of corporate social responsibility. That has been talking about the CSR policy, and your CSR policy is not considering the annual action plan, then probably you have to amend your CSR policy to that extent. One, that your CSR policy must exhibit the approach and direction which has been approved by the board based on the recommendation of the CSR committee. That's number one. But I think now your CSR policy must include certain guiding principles, like what would be the criteria for the selection of CSR projects and programs and activities, how those CSR programs, projects will be implemented, what would be the implementation strategy, the principles for that should be there. We need to include the principles, guiding principles for monitoring of that, and the formulation of annual action plan. If that is not there, perhaps you have to amend this. Then they have also considered the international organization. So these are the important definitions which has been taken. But then is the definition of net profits, who must look at it. There could be the issues on that. And then is the definition which has been added is, what do you mean by the ongoing project? That means a multi-year project undertaken by a company in fulfillment of its CSR obligations, having timelines not exceeding 3 years, excluding the financial year in which it was commenced. I'm just taking a pause here. One, it is a 1+3 during the year. Suppose if it is commenced in April 2021, then there are 1+3, 2022, 2023, 24 financial years that has to be taken it up, and shall include such project that was initially not approved as a multi-year project, but whose duration has been extended beyond 1 year by the board based on reasonable justification. So that's a very, very important aspect, that what would be the reasonable justification. there has to be a rationale which has to be adopted by the board while considering that, okay, whether this project, why that has not been taken, what are the plans and other things, which because there are certain practical implications when we are talking about the transfer of funds. Maybe the learned panelists will take it up as regard what would be the issues with regard to the unspent amount that has to be taken it up. Now, if I see this, so ongoing project, so one is the multi-year project, another is the normal project. If it is a multi-year project, that means for not exceeding 3 years, excluding the financial year in which it was commenced, and if it is a normal project extended beyond 1 year by the board based on reasonable justification, you approved it as a normal project, but then a reasonable justification was given and you made it as a ongoing project to that extent which is to be there. So I'm just giving you a brief on that. There is an office memorandum, MCA. They have any contribution to PM Care Fund. It will also qualify as a CSR expenditure that was issued. Then, and that all that happened on account of COVID, the circular 10 of 2020, spending of CSR funds may be spent for various activities that will be considered as the COVID-19 under item 1 to 12 of schedule. Then they came out with MCA General Circular of January 13 January 2020. Even carrying out awareness program on COVID that was taken it up for this. So in a way, if I see to it, the issues that important aspect coming is that when will an ongoing project be regarded as commenced? That's important. I think that if you look at that as regard the commencement, there is no definition which has been given to that. But if I look at the Black's Law Dictionary, it says that to perform the first act. And now the MCA has clarified to that extent when we discussed on those issues that an ongoing project will have commenced when the company has either issued the work order pertaining to the project or awarded the contract for execution of the project. Now, that's a very important aspect. You conceived the project, you have, taken that project to the contractor, you have awarded the contract, that will be commenced. And the moment it is commenced, even in the month of March, we said that, okay, those orders were taken and all, and then it becomes the ongoing project and unspent amount can be usually considered to that level. So on that implementation agency, because I have another 5 to 7 minutes, which I'll try to wrap it up on this, and I'll leave the FAQs to be taken up once other panelists will take. But if you see this, as regard the implementation, the two aspects have been given under the law. One, that either you do it yourself, and then either you do it through the implementation agency by the company singly or along with that companies. But who would be the implementation agency? It is either a Section 8 company, registered public trust, registered society, but there are two important aspects. That implementation agency must have the registration under Section 12 and 80G of the Income Tax Act. But that implementation agency, if the company has set up, that is fine. But if you are giving it to a third party, that company must have at least 3 years after that incorporation, that experience in undertaking the similar activities, that has to be taken it up. So these are the issues. A company may engage international. That's another important aspect, is the registration of the implementation agency is mandatory. That by filing that form CSR1, a company may engage international organization only for designing, monitoring, and evaluation of the CSR projects. It's important for it. It's not that for the implementation, it is only international organizations. If you have to use, it is to be used for designing, monitoring, and evaluation of CSR projects. A company may also collaborate with other companies for undertaking projects, program or CSR activities in such a manner that the CSR committees of respective companies are in a position to report separately on such projects, programs in accordance with these rules. Now, Nagendra Rao has already talked about the CSR1 form, but all that issues which the practicing company secretaries has to be taken it up, that certification, the aspects and the practicing companies, so I'm not touching. International agency, which we have already taken. Can a Section 8 company registered society under CSR project for other companies? Only if a company having established, which I have already spoken about it. If any CSR project already being carried out through a particular Section 8 company, will it become ineligible to utilize here if it has not received Section 12A? No, that we have clarified that prior to January 2021, that when the rules are there, if the board has already approved a project, which is a long-term project, and the company has already engaged an implementing agency through which CSR activities already being done, it may be permitted to continue with the activity, though that entity only, even before it obtains Section 80G and 12A, till the entire budgeted amount is spent on that project as per the approval already given. So you can continue to that extent. What is the responsibility of the company when it disperses funds to implementing agency for undertaking activities in pursuance of CSR? I think that responsibility of the company, the board, which my colleague will definitely take it up, is to monitor the implementation and to ensure that the implementing agencies are taking it in line with the CSR policy of the company. I think that's one aspect. I leave it, which we can discuss it during the question or session, is whether the amount contributed by the company to an implementation agency shall qualify as a sufficient compliance of subsection 5, considering that non-utilization of such amount by the implementing agency of the same financial year. So there is a circular which has been given by the MCA in the annual action plan that the implementing agency acts. What is there is that it acts on behalf of the company, and mere of the funds for implementation of project does not amount to spending. There are issues to it. We can discuss it during the question or session. But yes, no, that's where the MCA has clarified to that extent, and we need to look at from that angle for this. Just giving you one short synopsis of this. ABC Limited is meeting the criteria of Section 135 and is required to comply. Now, a company was a profit-making company in 1 year, say in 17-18, having a profit of 10 crores. I'm just giving you simple figures. 18-19, 19-20, there is a loss of 2 crores and 6 crores. Now, in the company, when it is in a loss, still whether the company is required to comply with and spend on that CSR. Now, the question is, what do you mean by the net profits? Whether the losses will be considered while taking, I think logically, I feel that it should be taken it up for this. But still, if it is on that average, so if I say that 8 is excluded on that 2 remainings of the average of the net profits, then 2% of the 2 crores, then probably I have to still, I'm obligated to spend that amount, which is required. Even the companies having the 2 continuous loss year, but 1 year was having a good profits for this. So in a way that there are issues on the legal issues on each of the aspect, if I will say that if CSR project was planned for certain amount to be executed during specified period by the board, and CSR project is completed before the prescribed time with funds remaining unutilized, in such a case, is the board free to use the unutilized amount in other project, or it has to transfer the same to the fund? It is provided that the board may alter such plans at any time during the financial year. So my view is that, again, I just want to give a disclaimer. These are my views. You can't consider it the views of the institute or a legal opinion, and That we can see on the facts and circumstances of each case, but I'm just putting it up accordingly in the given case. If the CSR project could be completed and some amount of money was left unutilized, the board may consider spending such money on such other CSR project activities and amend their annual action plan accordingly. This fact should also be disclosed in the CSR projects. So with this brief about on that 15-20 minutes, which I have spent because my time was only to the extent to give a fair chance of, I would love to hear my other panelists who are basically working in the companies and hands-on, that what practical examples they are also facing to it. Over to you, Nagendra Rao. Thank you so much. And then we can take it up in the question and answer session. Thank you.
Thank you very much, Satwinder Paji, for setting the tone for today's webinar on the Secretarial Standard Week on CSR. And aptly, you have started well with regards to the applicability, with regards to the most important, the guiding, setting the guiding principle to come out with an action plan and explaining the 4 MCA circular as well as the office memorandum which has been issued by the Ministry of Corporate Affairs. And also with the given limited time, few of the legal issues which you have dealt upon, which corporates or the practicing company secretary are likely to face. You also spoke about the implementation agencies with regards to whether an international organization can undertake or cannot undertake. You have aptly said so. You have also, to begin with, started with annual action plan. And for that, I would request our beloved past president to highlight what and all things are required to be taken into account for the annual action plan, because we need to amend the existing policy. What would content of the CSR policy may be, and how the CSR audit can take place, how we need to monitor either as a professional company secretary or in employment or as a practicing professional. And also, can you kindly highlight on the impact assessment which can be undertaken so that we will be in a better position to do our duty towards the corporate social responsibility. Over to you, Sridhar sir.
Thank you, IPP, Mr. Nagendra Rao, and good afternoon to all the fellow panelists and to all other professional colleagues who are attending this program. And of course, we are absolutely in the last lap of this week of the Secretarial Standards Week, and I'm sure it's going to be a great finish. I think with the stalwarts like Mr. Satwinder and Sanjeev and Pramod there, and with Mr. Nagendra Rao also being there, I'm sure it'll be a great finish to the Secretarial Standards Week. So, Mr. Satwinder Singh, as of course, has given a wonderful, comprehensive overview of the entire provisions, legal provisions of the 22nd January 2021 circular, which of course has been a watershed, if I may say so, circular as far as CSR is concerned. Just as CSR law, of course, 1st April 2014 was a watershed date, and I think for the CSR rules, I would say probably this 22nd January 2021 has been a watershed, a landmark rules. And of course, there are several issues which cannot be covered in 10-15 minutes, which are allotted to me. And what I would like to do is, I'll just, as Mr. Nagendra Rao mentioned, I'll just take up some practical issues of 1 or 2 aspects with the rules about the CSR policy, annual action plan, and maybe the annual CSR reporting, and a few practical issues coming in there. And as all of you are aware, the CSR policy definition, for that, which Satwinder Singh also mentioned, underwent a major change in the rule. And earlier, of course, the CSR policy was more like an inclusive definition, where it said that it should contain the list of CSR projects or programs which a company plans to undertake, the areas or subjects specified in Schedule 7, specifying the modalities of execution of such projects, and implementation schedules, etc. And then there was also an inclusive part about the monitoring process of such projects and programs. And so this underwent a major change, very rightly so, because CSR policy is not something which will give the list of projects or programs. I mean, we are not expected to give a list of projects and programs. A policy document is a kind of a motherhood document which has to remain for quite some time. And you can't keep amending the list of projects and programs every year. And quite rightly, the definition of CSR policy was changed in the new rules. And now it is not an inclusive definition. It is, it means, now they have defined it as meaning a statement containing. Now it is more of a general part because this is a motherhood statement containing the approach and direction given by the board of a company, taking into account the recommendations of the CSR committee, and includes the guiding principles for selection, implementation, and monitoring of activities, as well as the new concept which was introduced, the formulation of the annual action plan. So this was a very concise and precise definition of CSR policy which came out in that rule. And now, as Mr. Satendra also mentioned, all companies had to change the policy because it had undergone a major change, major shift in the understanding of CSR policy. And just to give a little flavor of what companies did about changing the CSR policy, of course, what was made in 2014 had to undergo major change, and it was basically a supersession of the earlier policy. And I'll just give a few contents of the CSR policy which people, many companies had to put in. While, of course, the definition gave precise meanings of some terminologies, but I'm just trying to expand a little bit on that. And what CSR, a typical CSR policy of a large corporate contains. Of course, it contains a little bit of introduction of the requirement as to why this policy was required. Then the philosophy and the approach and the direction generally followed by the company for CSR activities. So there is there are a few paragraphs which are put to give the general philosophy of the particular company, because there are several companies which have been in existence for many decades. So they have a philosophy which has come from generations, and that philosophy is laid down in the policy. And then comes the guiding principles. And as I mentioned, the guiding principles for selection, implementation, and monitoring of activities. And for selection, one may have to go a little deeper and say how the CSR projects and programs are selected. Say, for example, again, it depends basically on the philosophy and the culture of the particular organization and its general strategy about general strategy and the general thinking about how the CSR obligations have to be met, because many of these companies were having CSR activities well before this act came into this particular section came into existence. So it is more of a continuum for many of these companies. So a little background is being given about that. And then it also says how the activities will be aligned with the overall national objectives or the international objectives or the community development aspects. And it will also mention as to what kind of preference would be given to the areas or the regions. And then we'll also mention apart from, of course, complying with the provisions of the Companies Act and the rules made thereunder, it will also mention what are the national and the international goals, how it will be aligned with the national and international goals, and then and where the preference will be given, etc. So this is a kind of a selection process which will be mentioned in the policy. Then the modalities of execution and implementation, how the how it is done. I mean, how do you execute this particular plan? So, for example, the role of board is mentioned as to what the board would be doing, and then how it would be ensuring that the activities are undertaken by the company as per the annual action plan, how to spend the 2% of the net profits, and how it is done through various entities, and what will be contained in the annual report, etc., and generally complying with the provisions of the law on CSR. Then the role of CSR committee is also laid down in the CSR policy. And then apart, of course, CSR committee, or the role is already well known to all the members here, so I'm not repeating that part. And then, of course, each company may have different styles of managing those programs. So some companies may have a steering committee. So how a steering committee takes up the obligation, how it does the initial spade work, and how it makes the recommendation to the CSR committee, which in turn recommends to the board. So there is a 3-tier system. And then the steering committee in turn may have a support of the CSR team, and the CSR team's role is also specifically mentioned in the policy. What kind of role would be assigned to the CSR team, and what it will be presenting to the steering committee, which will consider all the proposals and so on. And then thereafter, of course, the implementing agencies like the CSR vehicle, we may call it. So as to how it would be done, whether we would be concentrating more on Section 8 companies, or whether it will be the registered trust or the registered society, and what kind of track record, because there are some minimum requirements under the provisions. Whether the company would like to have a little more stringent provisions, the company can decide. Then comes the monitoring and the assessment aspect. Say, for example, in the monitoring part, how do you release the funds for the CSR project and programs? And whether if it is not given in full, and if it is given in parts, in after what milestones it will be given, etc. General principles would be mentioned there. And then how those things would be reviewed by the CSR committee or the steering committee, and what kind of utilization certificate should be obtained from those implementing agencies, and then who should sign those utilization certificates, and whether there should be an external agency assessment, and whether the utilization certificate before it comes to the company, whether it has to be certified by an auditor there, or whether it has to, and whether the company will have to have its own internal audit or an external audit, and how do you report all these things in the annual report, and so on. So these are things which will be put in the policy. And then the last one, which is new requirement under this new circular, was the guiding principle for formulation of annual action plans. So how the annual action plan will have to be framed would also be contained in the CSR policy, because that, as per the new definition, the guidelines for formulation of AAP also will have to be contained there. And then there, for example, while it recommends that annual action plan to the board, it has to list down all the CSR, I mean, it has to inform the steering committee and others to make a chart where the CSR projects and the programs to be undertaken by the company in the areas of the subjects, etc., are properly laid down, and how it is going to be executed, whether it will be done directly or through those implementing agencies, and then whether it will contain what modalities of utilization of funds, implementation schedules, etc. would be there. And then in which situations you will have a need assessment done, in which cases impact assessment will be done over and above what is provided under the law. And all these things would be contained in the CSR policy. And then, of course, one final line, kind of a disclaimer would be put, where it would say that it has to be read in conjunction with the Companies Act and the rules made thereunder, and that the policy will be subject to review from time to time. So these are some of the practical aspects of CSR policy. While it may look simple, but one has to go into several details. It has to be a cross-functional approach team, and which has to carry out this CSR policy. And then the other aspect is now about the annual action plan, about which also I think there are major changes in that January 21 circular. Now, the CSR committee, that under Rule 5.2, which is a new concept, so it has to formulate and recommend to the board an annual action plan in pursuance of the CSR policy. So while the CSR policy contains some directions for the formulation of the CSR policy, annual action plan, similarly in the annual action plan also it has to be done in pursuance of the CSR policy. So there is a little bit of an interconnection. And in the annual action plan, so when you say annual action plan and when you say it is an annual one, so naturally it has to be done at the beginning of the year. It cannot be done somewhere in the middle of the year or towards the end of the year. So typically it has to be done in April itself, when you have to come out with the entire plan. And when you do it in April, I mean, depending on when the company comes out with its accounts, assuming a company comes out with its final accounts by end of April, then it has to be done maybe a week before the accounts are finalized for the 21-22, for example. So which means the annual action plan, because it has to give the list of projects and programs that are approved to be undertaken in areas or subjects specified in Schedule 7 of the Act. So here again, another point, a practical point which comes in is what you can list down there in April for the entire year would be only what is already in hand. Because the proposals which are going to come, let's say sometime in August or September or October or later part of the year, then actually you are not aware of those. So you are going to give only the list of projects which are ongoing as on 31st March 2022. Say if you are going to do it in April 22, so you will be looking at the ongoing projects as of 31st March 2022, and you will be listing all those ongoing projects as on that date. And as far as the projects or programs will be carried out during the remaining 11 months of the year or 12 months of the year. So naturally, since we are not aware at this stage, so we will have to put a general one that as and when the projects come up, the proposals come up, in line with the CSR policy, those will be taken up. So the annual action plan cannot contain the entire list of all the programs which will be carried out during the year. There will be some which are other than ongoing projects which will not be taken up in the annual action plan. Then the next point is the manner of execution of such projects or programs as specified in Rule 4. So which means whether you're going to do it through Section 8, whether you're going to do directly, how much of it is going to be direct, how much of it is going to be through Section 8 company, how much of it is through the registered trust, how much is through the registered society established by the company itself, and how many of those are going to be by, let's say, Section 8 company registered by some other company, or registered society or registered trust or established by some other company, but which has got a track record of at least 3 years in that activity. So where you can implement it, you can execute it through any of those things. So in the annual action plan, in the, at least in the list of projects, you will have to mention how you are going to do it, which will be the implementing agency, which will be done directly, and so on. Then here comes another important point, the modalities of utilization of funds and implementation schedules. Here again, the utilization of funds. So when you are going to plan for the year, you should know what will be the amount that you are going to spend in the coming year. Say, for example, in 22-23, what is going to be mandated for you, you should be aware, and for which, unless the accounts of, say, 21-22 are final, completely audited and ready, you won't know the exact figures. So, and so those figures, because you are going that the mandated amount depends on the 3 years profits of the period prior to 31st March 2022. So you will have to have those figures, and those figures are, of course, unpublished price sensitive information, and therefore that cannot be circulated too much in advance. So you have to ensure, you have to strike a proper balance. It should not be too early, it should not be too late, and you should give sufficient time for the directors to consider it. At the same time, you have to be cautious about giving that unpublished price information, even if it is only to a few committee members. You have to be a little careful there. You have to be very cautious, but you should know the figures, and only when you know the figures, you will know how much is to be utilized, how much is, and what will be the implementation schedules, and so on. How much would you like to do it in Q1? How much you would like to do it in Q2? How much in Q3? How much in Q4, etc. And then, so the annual action plan will have to contain all that. But again, subject to that other point which I mentioned, you may not know about all the projects that you're going to carry out during the year. At least to the extent of the ongoing projects, you should be able to say. But you can't say again for the ongoing projects which will be approved, so say after May 2022, because that is not known today. So to a limited extent, the annual action plan cannot be complete in all respects, but to the extent possible, it will be done. Then, how do you do the monitoring and the reporting mechanism for the projects? So again, that also has to be laid down in the annual action plan. And say, for example, in a typical annual action plan, say how you do that, I'll just maybe take a few examples. Say, for example, in the annual action plan, in a typical one, the mandated CSR obligation for the company, again, when you do that, you should also know whether there has been any surplus generated out of any of the projects in the previous year, because that has to be properly adjusted. Whether there has been an excess amount spent in the previous year which can be set off in the coming year, that also you should be knowing. How much is the amount that you are likely to spend for, say, administrative overheads? How much are you likely to spend for the impact assessment? Or what is the planned utilization versus ongoing project, etc. So all these figures you will have to mention in the annual action plan. And then the list of CSR projects and funds allocated to projects will be prepared in a way similar to the format which is given for the annual report. You can have the similar columns and mention the project title, the schedule, and local area, etc., etc. All those you can mention as per the particular format. And then you also mention a little bit about the need and the impact assessment part. And even prior to that, you will have to talk about your focus areas. And when I mentioned about manner of execution and selection of implementing agencies, similar to that, while policies containing the general provisions, here it will be a little more specific one. So which ongoing project will be done by which particular agency, etc. And about the monitoring and the reporting mechanism, and how the reports will keep coming, will flow to the CSR committee and the board, etc. And then in which cases, how many projects will be getting covered for impact assessment during the year also you should know. And of course, for example, a 12-month period was there. A minimum 12 months period has to elapse before impact assessment can be done. Again, for a company which has got an obligation of at least average of 10 crores in the last 3 years, and for a project of more than 1 crore, you will have to have the impact assessment. So how many such projects come under that category during the year? You should be able to say. And are there any projects where you feel that need assessment would be required? So that also you have to put in the annual action plan. So these are some of the things which will have to be considered. And as far as I got maybe 2 minutes more, President. IPB.
You should conclude, please.
Okay. Last only 1 minute. I'll say. I'll take only 1 minute.
Sure.
Okay. Last minute about the annual report format and what is to be put in the website. Actually, there is a column in the format which is provided by MCA where it says that where there is a failure to spend, you will have to give the reasons. Here, at the same time, the MCA's FAQs and others also have specifically mentioned that if you have put the amount in the unspent CSR account, or if you have put into the specified funds for other than ongoing projects, they are supposed to be compliance. So if there is a compliance when you are transferred to unspent CSR account or when you are transferred to the funds, you cannot call it as a failure to spend. It is just it is a different mode of meeting the obligation. So I think the word failure to spend, I think, is creating a little bit of a problem that should not be there. And so that is one part I think MCA may consider while redrafting that. So I think thanks a lot for giving me the time, and thanks Mr. Nagendra Rao and all the other panelists. Thank you so much.
Thank you very much, Sridhar sir, for highlighting the most important aspect with regards to CSR policy, distinguishing between the CSR policy as well as the annual plan, which is required to be contents needs to be incorporated in the annual plan, so that we set the right tone, the guiding principle, and how the CSR project is to be selected, aligning the objectives with national, international, which areas of preference, modalities of execution, and all. One most important thing which you highlighted was striking a proper balance. And I feel for striking a right balance, it is the role of board and the role of the committees, for which I would now request CS Sanjeev Groverji to speak more about the role of the board, the role and responsibility of the committees, as well as the administrative expenses, the skill development portion which is required so far as undertaking of the CSR activities are concerned. Over to you, Sanjeevji.
Thank you, Mr. Rao, and good evening to my co-panelists. Thanks to the Institute for giving me this opportunity, and I feel honored to be part of this gathering. Let me share my presentation. Is it visible? Yeah. So I would refer to, the Satvinderji told in the starting that, the CSR expenses should not be spent on employees, first of all, and it should be for the public at large. Let us see, are there any exceptions to this or not in my first point, which is the payment of stipend to apprentices, which is whether it is covered under CSR or not. Then I will touch upon the administrative overheads and also the responsibilities of CSR committee, board and company secretary, though as far as the responsibilities of CSR and the board are concerned, I think ultimately this is the company secretary who has to execute and implement everything on behalf of them and not directly by committee and the board. So let us see whether, the payment of stipend to apprentices covered under CSR or not. And to start with the background of the apprentices, see, the apprentices are engaged by the establishments under the Apprentices Act 1961. And there are certain rules which are apprentices rules 1992. And whether apprentices are, not the employees under Code of Wages Act 2019. if they are not the employees and the companies are spending on stipend and the training expenses, can we consider payment of stipend under CSR? And also, if you see Schedule 7, it excludes the activities for fulfillment of any other statutory obligation under law. Since apprentices are engaged under the Apprentices Act, and this is the statutory obligation of an establishment which comes under the Apprentices Act, can we exclude it from the CSR activity? So there are many things which are coming out of it. One, that they are not employees. Second, it is the statutory obligation of the company under Apprentices Act. But at the same time, if you see further see the Schedule 7, it also covers the skill training. We can take the activity of skill training of these people, and then let us see whether the Schedule 7 covers it as a CSR activity or not. So there are things which are in the favor of whether it can be considered as CSR activity. There are certain things which are coming that it should not be part of the CSR activity. Now, what the Ministry of Corporate Affairs has said about this? See, MCA issued a circular in February 2016, that is the 10th February, and said that the companies which are required to undertake skill training of its apprentices under the Apprentices Act can also undertake such skill training from their CSR funds. So, it is true that they are not employees, but at the same time, this spend is not for the public at large. Still, Ministry of Corporate Affairs, by this circular, has said that, okay, if you are giving training to them, you are spending on their stipend, that skill training can be covered under CSR funds. The next question comes, if a company is supposed paying, a large company of a size like Maruti Suzuki is paying around, for example, 25 crores on stipend of these apprentices and also the training expenses. Is 100% payment made to apprentices covered under CSR? This was also clarified by MCA. See, under the Apprentices Act and the Apprentices Rules, the minimum, the manpower which can be engaged in terms of apprentices is the 2.5% of the total strength. Now, suppose if the total strength of the manpower in the company is 100, you have to take, and the Apprentices Act is applicable to that establishment, then you have to have at least 2.5 apprentices in the company. So minimum requirement is 2.5% of the total strength of the manpower. Now, similarly, the Ministry of Skill Development and Entrepreneurship had issued an office memorandum on 11th March 2020 that companies are permitted to utilize their CSR funds towards apprentices training, which includes expenditure on basic training and stipend payable to the apprentices under the AP Act, and told the establishments to take apprentices in a band of 2.5% to 10%. Now, what is the logic of taking the employees from 2.5% to 10%? Coming back to the previous slide, when the ministry says that, okay, if you are spending, in my example, like 30 crores, but if you are also spending 5 crores, which is the requirement for the 2.5% of the apprentices, so the additional 25 crores which you are spending on the apprentices, that can be counted as a CSR expenditure and not the minimum amount you are required to spend on the apprentices. Let me take this example to further explain what exactly is there. That suppose the total manpower of a company is 1,000, which includes the apprentices also. So the minimum apprentices is the 2.5% of the manpower is 25 apprentices, but the company engaged 100 apprentices. So the additional apprentices which the company has engaged is 75. So the expenses which are incurred on these additional 75 apprentices can be considered as CSR expenditure. So this is just an exception to that rule that we cannot spend on the employees, though the apprentices are not employees, but we are not spending this money for the public at large also. These people are, directly and indirectly associated with the company, but the additional amount over and above the minimum amount which is required to be spent on the apprentices can be taken as CSR expenditure. Now, what exactly is the advantage of this rule? See, sometimes the companies do not find good projects for CSR activities, or they do not have resources to undertake bigger projects. As such, the expenses toward stipend and training of apprentices may be adjusted and taken as a CSR budget. I'm not going into the disadvantage of this rule, which we may discuss in the Q&A session. There are disadvantages also for this rule, which we'll take it later on. Now, coming to the administrative overheads, which Satvinderji has also mentioned and Sridharji has also mentioned, that the expenses which are 5% of the total CSR expenditure of a company for the particular financial year can be taken as administrative overheads, and these expenses must be for general management at administration of CSR functions. What exactly can be included in this is the employee cost in CSR division, utilities, legal expenses, training for the employees, stationery cost, and their traveling expenses, etc. However, suppose you have given a certain project to a implementing agency, and the salary of, for example, the school teachers or other staff for education related CSR projects shall be covered under education project cost, not under the administrative overheads. And this has been clarified by MC also, that expenses incurred by the implementing agencies on the management of CSR activities shall not amount to administrative overheads and cannot be claimed by the company. So there is a difference between the administrative overheads which are spent by the company directly and the administrative overheads which are spent by the implementing agency. So the administrative overheads which are spent by the company directly are to be taken as under the administrative overheads, and that should not be more than 5%. If the total outlay is 100 crore, then it should not be more than 5 crores to be booked under the administrative overheads. Now, what exactly are the responsibilities of the CSR committee? I will also touch upon the responsibilities of the board as well as the company secretary. But if you see, wherever the CSR committee has to act, whether it is the formulation of the CSR policy or the review of CSR policy from time to time, or the action taken report which is emanating out of discussions from the CSR committee and from the minutes of the CSR committee, review of the annual report which was touched upon by Sridhar sir. So you see, from the perspective of the company secretary, who is an officer in default, if suppose anything which is written under section 135 and the rules is not complied with, though it is the responsibility of the CSR committee and the board, ultimately the culprit would be the officer in default, who is the whole-time director, and also the KMPs, and which includes the company secretary also. Even if under section 135 subsection 5 and subsection 6, if the amount of the unspent amount on the ongoing projects or the projects which are other than ongoing projects are not transferred in the funds as established or mentioned in schedule 7, or to the unspent account of the company which is to be opened for transfer of the amount out of the ongoing projects, there is a personal liability of the officer in default, which is the 1/10 of the total amount which is to be transferred, or rupees 2 lakhs, whichever is less. So we have to be very, very careful as far as the responsibilities of the CSR committee are concerned, whether it is the list of projects to be finalized, the manner of their execution, implementation schedule, how to monitor these projects. The role of the company secretary is to on continuous basis discuss with the CSR division and also be in touch with the chairman of the CSR committee, so that CSR committee should be able to perform their duties in latter end. spirit. Now, if we see the responsibilities of the board, now again it is the approval of the CSR policy and the annual report, but who will prepare the CSR policy? This is the company secretary's job. Who will prepare the annual report in terms of the rules and the section 135? Again, it's a role of the company secretary. Disclosure of contents of such policy in its report, again the company secretary, also placing it on the company's website. Ensure that the activities included in the CSR policy are undertaken by the company. Ensuring that the company spends in every financial year at least 2% of the average net profits of the company made during the 3 immediately preceding financial years. The board has to satisfy itself regarding the utilization of the disbursed CSR funds. Again, the board has to take the CFO certificate. Again, the role of the company secretary comes into play. He has to continuously be in touch with the CFO and the finance division and take that certificate and place before the CSR committee and the board. Then the board has to specify the reasons of not spending the amount which Mr. Sridhar has already touched upon. See, in all these activities, the role of the company secretary is very, very crucial. Now, coming back to the responsibilities of the company secretary per se is, again emanating out of whatever are the responsibilities of the CSR committee and the board, be it, the preparation of CSR policy and any amendments thereto, informing the CSR committee and the board about the changes in the legal provisions of CSR, especially the penal provisions. Sometimes what happens that we are not forthcoming in telling the penal provisions to the chairman of the CSR committee or the board. We always think that, okay, we have to do our job in such a way that, everything is complied and there can't be any non-compliance in that. But at the same time, I would prefer, you should give a presentation, a clear-cut presentation at least to the chairman of the CSR committee, and telling them that if the things are not complied with in spirit and letter and spirit, there the penal provisions are very, very hefty in section 135. Then another thing, company secretary has to coordinate with the committee and the board, but at the same time, there is a separate CSR division which takes care of everything which is related with the CSR activities. As a company secretary, you have to be in continuous discussion with the head of the CSR division, educate them about the legal provisions of the CSR, and tell them the action taken reports which are emanating out of the minutes of the CSR committee and the board. Be in continuous touch with the chairman of the CSR committee, support him, because in my case, like, the chairman of the CSR committee is also the chairman of the board. Whenever the CSR, the activities go to the board and the explanation is to be given at that level, it is the chairman of the CSR committee who has to brief the board. So you have to educate him regarding the legal provisions, what exactly are the activities are taken care of by the CSR division, have a separate meeting with them, and then support him in every aspect of the CSR activities. Also, there is this chief financial officer. You have to coordinate with him and also with the finance division for issuance of annual certificate, which is to be placed before the CSR committee and the board. So these are some of the aspects. Rao Sahab, I have completed my presentation. So there are these aspects which are, the skill development, which we can take as a CSR activity as far as the payment of stipend and training expenses are concerned, and the role of the company secretary as far as the CSR committee and the board are concerned. So thank you very much for giving me this opportunity. Over to you, Rao Sahab.
Thank you very much, Sanjeev ji, for highlighting the role and responsibility of the company secretary and how we should be on toes, as we also, being a KMP, have to explain the various nuances with regards to the preparation of policy or liaising with the CSR division or supporting the activities undertaken by the CSR committee. Thank you very much for such a lucid presentation. Now, having known the various aspects of CSR, we also want to know what would be its accounting treatment or accounting aspects when it comes to post spending of the amount in the CSR, or what will happen in case there is a surplus, or what happens in case if there is a unspent amount in the funds or implication, or what would happen for the carry forward of CSR expenses. I am sure that our next speaker, CS Pramod Rai, I would request him to kindly touch upon this particular aspect so that the full aspect of CSR is fully covered, so that we as a professional know from pin to elephant about the CSR role and responsibility, and we can hone our skill in the area of CSR. Over to you, Pramod Rai ji.
Thank you, Nagendra ji. I am sharing my screen. Please let me know when the screen is up. Hope my screen is visible.
Yes.
It is visible? Thank you.
Yeah.
So thank you everyone for this great opportunity to just good evening to all the panelists and participants. I have the benefit of being the last speaker. Already you have heard the words of wisdom from Satvinder ji on various legal aspects and changing dynamics of laws over a period of time. You have heard from Mr. Jayaraman providing some aspects on annual action plan, role of CSR committee, board of directors, how the monitoring should happen, what are the practical aspects with regard to impact assessment, etc., etc. And very lucidly, Sanjeev ji has covered the role of board and committees and how the CSR funds can be utilized in some more ways other than what has been prescribed. It is really interesting to hear that. The topics assigned to me are accounting aspects of CSR and practical aspects of CSR spends, disbursement and utilization of funds. Just let me make a disclaimer that the contents of this presentation and all my views are my own, and any such views expressed should not be taken as an organizational position nor views of the expert group on secretarial standards. Within this another 10 to 12 minutes, I will try to cover various aspects, which is just an introduction of what is the overarching principles that I think should be part of CSR, what are the accounting aspects of CSR, what are the practical aspects in terms of CSR spends, disbursement and utilization, and then few closing remarks from my side. As aptly given in the FAQs of CSR by Ministry of Corporate Affairs, it is not now debatable whether it is an expenditure which is voluntary or it is mandatory. The clear guidance which is given by the FAQs is the spirit of the act is to ensure that CSR initiatives are aligned with national priorities and enhance engagement of the corporate sector. So it is now not contribution, but engagement of the corporate sector towards achieving sustainable development goals. This is now the primary driver of CSR provisions, and that is how corporates are behaving. Another extract from the same FAQ is that CSR is a board-driven process, and the board of the company is empowered to plan, approve, execute, and monitor the CSR activities of the company based on the recommendations of its CSR committee. Another overarching principle is the CSR architecture is disclosure-based, and companies are required to file details of CSR activities annually with Ministry of Corporate Affairs. Companies are required to make necessary disclosures in the financial statements regarding CSR, including non-compliance. I emphasize on including non-compliance. What Mr. Jayaraman was saying is that it's failure to spend which is also required to be disclosed. It's actually not failure to spend. It is like complying with the requirement of law. But unfortunately, in the FAQs, they say even if it's the amount, unspent amount is transferred to CSR fund, it will be termed as non-compliance and there could be a penalty imposed by the Ministry of Corporate Affairs. Last not but not least, two more points. The existing legal provisions such as mandatory disclosures, accountability of CSR committee and the board, and the provisions of audit of accounts of the company provide sufficient mechanism for monitoring by the government. So there is no separate accounting which is required. There is no separate disclosures which are required. It is as part of the usual disclosures, and based on following the standard accounting principles, the CSR provisions are dealt with. Lastly, the government says that you are all self-regulated. The government has no role in the approval or implementation of CSR programs or projects of a company. So this gives an overarching principle that it is all self-governed. The board and the CSR committee is absolutely authorized to do every thing which is within the permits of law. Now the accounting aspects of CSR. There are few things. I'm not putting everything on the screen. The law says that 2% of the average net profits have to be expended during the year by all the eligible companies. There could be a situation where the amount is fully spent or entire 2% is spent during the year and there is no issue. Standard disclosure is that it is expensed out of the profit and loss account. When it comes to unspent amount, there are two aspects. One is when it is a standalone projects and when it is ongoing projects. In case of standalone projects, as the law says that transfer has to be done to the specified funds within 6 months. In case of ongoing projects, it is transferred to unspent CSR account within 30 days. If at all there is a unspent amount left, what has been allocated during the year. If at all during the 3 years the amount is unspent, then the transfer is to the specified funds after 3 years within 30 days. Then we come to excess amounts. If excess spent has been done on the CSR, there is an option available to the board of directors and the CSR committee to carry forward the excess amount which has been spent during the year, and it can be set off for 3 succeeding years. They have to pass a standard board resolution to opt for this option. Another aspect is surplus arising from CSR activities. So as every speaker has already detailed about it, it has to be pluffed back to the CSR activities. It is not meant for consumption by the business in the normal course of business. Then the second last point is overheads. Again, it is up 5% of 2% can be utilized during the entire year. And Mr. Sanjeev has very well articulated what all are covered under administrative overheads. As far as impact assessment is concerned, again, up to 5% of 2% is allowed to be expended. Although, let me tell you, if it is a big company and you have seen the impact assessment agencies who are doing this impact assessment, 50 lakh would be a very paltry amount. They have to expense it out from the business expenditure only. So how do all these treatments work under accounting standards or accounting principles? First is CSR expenditure would be recognized as an expense in the statement of profit and loss account, and as and when the expenditure is incurred on CSR, it is expensed it out. In case of unspent amount, if a legal obligation arises to transfer to specified accounts, it will depend upon whether such unspent amount relates to ongoing projects or not. Therefore, the liability need to be recognized for such unspent amount as at the end of the financial year as per para 17A of the Ind AS 37. Any unspent amount in respect of expenditure incurred for which there is a contractual liability, then it is to be shown as part of the current liabilities, and if payable beyond 12 months, then as non-current liability under the balance sheet. For ongoing projects, amount which is yet to be spent, that is transferred to a separate fund account, should be shown as a current asset under cash and bank balances with description that these funds are earmarked for CSR spend. For other than ongoing projects, any unspent amount which is yet to be transferred to a specified fund account should be shown as current liability with description that this is payable within 6 months of balance sheet date. Excess expenditure which company decides to carry forward as an asset to be shown as current asset under the head loans and advances. Any surplus which is arising from CSR activities shall be recognized in the profit and loss account, and since it cannot be a part of business profits, the same should be immediately be recognized as liability for CSR expenditure in the balance sheet and recognized as a charge to the statement of profit and loss account. Last but not the least, as part of the accounting treatment in the interim financial statements, which is quarterly or half-yearly statements, the CSR obligation will be recognized based on the principles for recognition of the same in annual financial statements. So these are few aspects of accounting which is involved in CSR expenses and CSR expense. Now coming to practical aspects of CSR spends, disbursement and utilization. The fundamental principle, according to me, as part of the organization, as part of company secretary's function, I think the only advice is ensure entire amount of expenditure earmarked is expended. Any failure which is with regard to unspent amount will lead to admitted non-compliance, as we have already shared during this webinar. It is the moment there is any, although there are tens of provisions with regard to unspent amount, but the moment the year crosses by and there is certain amount left as a CSR expenditure, it will be an admitted non-compliance. Some of the practical aspects of board's responsibility, how they satisfy the disbursement and utilization, and how the CFO certify the same to the company. First and foremost is the protection of the board and CFO. As Sanjeev ji said, that it is the responsibility of the company secretary to ensure that chairman is fully aligned, chairperson of the CSR committee is fully aligned on the projects. We have to ensure that all the information is provided to the board and CFO for back-to-back certification on all the projects. As part of the internal governance, there should be we have a cross-functional team of CSR project committee which meets on a quarterly basis before the CSR committee meets and discusses all the projects, plans, monitoring, impact assessment agency plans, and also the various certifications that are required in terms of utilization of the CSR expenditure. Then quarterly review meetings of project committee and CSR committee. Earlier, companies used to have half-yearly CSR committees or yearly CSR committees. With the advent of now the law, which is ever changing, and the responsibility of disbursement and utilization is much more than earlier, it is better to have quarterly committee meetings of CSR as well as the project committees, which are an internal governing committees of the company. In that committees, we should in every quarter rather than a year end by, it is better to do quarterly review of all the total CSR expense, overheads, impact assessment costs, ongoing projects, and there could be a possibility of a dashboard which is available for all the cross-functional teams where CSR spends can be viewed at one go across the organization. Then there is a need to have a clear metrics as to who owns the activity. Are there enough approvals available within the company and authorizations to spend under the CSR? There should be a responsible person who authorizes the CSR expenses and ensures that it is properly utilized. The other area which is very time consuming for us in the corporates is due diligence of the implementing agencies. So what we have done is we have standard operating procedures, how the implementing agencies should be selected, what kind of balance sheets they should have, what kind of operations they are into, what are their 3 or 5 past year records, is there any public scrutiny of those implementing agencies. All this due diligence is taken care of by the cross-functional team and the project committee. The most important thing is now it is part of the quarterly results. So collaboration with the statutory auditors and secretarial auditors on various disclosures, also various interpretational issues may be thrashed out even on a quarterly basis without waiting for the year end. In terms of impact assessment, what, when, and how. Impact assessment can be for those projects where it exceeds 1 crore. That's right. But there are cases where the company wants to go for an impact assessment. What should be done? Which should be the agencies which should be engaged for the impact assessment? Is it possible to find out good implementing agencies? Are there a panel of impact assessment agencies which are part of the company's list to whom they can approach at any point in time? What is the monitoring mechanism of monies disbursed to impact assessment agencies? This is an internal framework is prepared in the company to ensure that all the monies which are disbursed to impact implementing agencies are properly utilized. There is also a requirement that we generally disbursed money to central or state government agencies, public sector undertakings. In these cases, while you disburse the amount, there is no utilization certificate they provide. What form of acknowledgement we should ensure from these central or state government agencies to ensure that the amounts which we have disbursed to these agencies are properly accounted for is something which is very important to see from corporate side. Similarly, back-to-back certifications by impact agencies, implementing agencies for amounts disbursed and utilized. For example, if not 1 crore, but just 10 lakhs or 12 lakhs or 15 lakhs is disbursed to the agencies. What is the mechanism? Do we have a certification which is, for example, by an external third party like a practicing chartered accountant or a company secretary who certifies the disbursement and utilization by the impact agencies, and these agencies then submit the documents to the company. Also, during the signing of the contract, the disbursement amount has to be in a way that they are properly disbursed and utilized by the end of the year, and it doesn't end up that the implementing agency is not able to utilize that amount at the end of the year. So accordingly, if during the year 10 lakh rupees has to be disbursed, 30% has to be released, and utilization certificate of 30% is obtained. Similarly, for the entire year, 1 or 2 or 3 or 4 certificates are taken so that they do not end up keeping the unutilized money at the end of the year. Then instead of yearly certification, there is a quarterly certification that can be provided to the board on quantums of spend, utilization and disbursement. The repository of all the implementing agencies can be prepared, and the reports are submitted by the implementing agencies rather than we following up with them all the year. And last but not the least, it should be assessed whether there is a need for a separate account for CSR project programs. Generally, companies do expend the money. For example, 50 crores in a year is allocated during the initial part of the year. Can this 50 crore be transferred to a separate account to ensure that this money is then disbursed properly out of the account to ensure proper controls? One of the issues that Mr. Jayaraman said was that annual action plan is prepared when already the year has started. So there could be a possibility where CSR committee and board before the end of the year decides on certain amount, certain provisional annual action plan is prepared so that by the time the first board meeting happens, the annual action plan is already in place and those expenditures are actually incurred by that time is accounted for. Just closing remarks. In conclusion, I would like to make some comments that please do not consider CSR provisions lightly. It is indeed a statutory obligation and going along with doing the business. The philosophy remains that CSR activities is for the purpose of the society at large. Whenever having any discussion with the company or implementation partners, this should be the guiding principle. clear out all interpretational issues with regard to applicability, CSR policy, annual action plan, and draw up a calendar for review of meetings during the year. Don't wait for the last minute at the first beginning of the year, because any unspent amount will have implications. It is better to draw up a calendar for the entire year. It needs to be sensitized among the board of directors of the company as well and other stakeholders. Take them to the CSR projects, request them for references and feedback. Focus should be on scale and impact both. Those who are compliance professionals, my 1 cent of advice would be to do a lot of advocacy within the company and outside the company. Involve yourself from all some of the team members from who can really contribute along with CSR team for various projects and programs. Understand the projects. Be part of internal governance framework as well, so that at last there is no emergency that comes in wherein you are required to pass a circular resolution or call for a CSR committee meeting or board meeting. Take inputs from experts, authorities, other fellow members, but reach out to everyone. Nowadays, everyone is well read. Don't go into words and phrases which create confusion. Review the internal governance framework and watch out for timelines and which are mapped to your quarterly results or the half-yearly results. As much as I understand, complete freedom is given to the company's board and CSR committee to design the program or project so as intent is society at large. There is I don't think so there is any prohibition under entire CSR provisions where there is any authority which has been curtailed for the CSR committee or the board. Any time during the year, either ongoing project or standalone project can be altered, can be modified, can be converted into an ongoing project. Standalone can be converted into an ongoing project with the approval of CSR committee and the board of directors. With that, I would like to stop. And once again, thank you for the time and attention.
Thank you very much, Pramodji, for your lucid presentation. Though you said in your initial address that you are the last batsman, but you have hit the last ball like MS Dhoni, the 4 or a 6. And I'm sure that the presentation what you made had elaborate issues covering all giving solution with regard to the accounting treatment and also the various aspects of CSR. Now let me take some few questions. My first question to Satwinder Singh is, there are 3 questions in it. CSR is applicable to companies with net profit over 5 crores. For the purpose of threshold, which profit is to be considered, PBT, PAT, or profit calculated as per section 198? That is question 1. Question 2 is, should dividend received from the wholly owned subsidiaries incorporated outside India be considered while calculating the net profit under section 198? And the third question is whether there is any specific format for issuing the utilization certificate by a practicing professional. Over to you, Satwinder Singh ji.
Third question. I think the first question.
Profits. It is regarding profits.
Okay. No, I think that is, if I see the net profits, which I said that over how it is to be calculated, that is as per section 198, which we have to consider, and it is accordingly that has to be considered for this. Your second question is
dividend received from wholly owned subsidiary.
On the dividend received from the wholly owned subsidiary. I think if you see the contents of this, that the dividend is to be excluded. When I was just also taking my presentation on the net profits, the dividend received from that subsidiary which has already subject to the CSR obligations, because it has to be independently seen. So the onus is on us that not every dividend is to be excluded, only that dividend from that subsidiary which is subject to the CSR obligation, that will be excluded, so that there should not be a double dip on the CSR. This. The third, which you have said, is the profits. The format. Utilization format. I don't think that the onus is on the committee and the board and the CFO, and they have to see to it. And I don't think that there is any format which has been given by the ministry on that, the utilization.
Okay. My second question is to Sridhar sir. Two questions. One is, if state government company is unable to transfer its CS funds within the stipulated time period, that is 31/3 of the March, can the state government company contribute its CSR funds towards state government fund or to contribute to the central government fund? The second question is with regards to in case of a company wherein you will find that the profits for the last 3 years and the obligation during the preceding 3 financial year is less than 50 lakhs, can a company dissolve the CSR committee immediately? The company is having a profit during the preceding financial year, but not in the current financial year. Whether in the CSR obligation is less than the profit earned, whether the CSR committee needs to be dissolved, or can a company dissolve its CSR committee?
Thank you, Mr. Nagendra. So on the first question, whether the funds unspent amount can be transferred to a state fund, that is not allowed, and is only the prescribed 4 funds where like the PM Cares Fund, the PM Relief Fund, the Swachh Bharat Fund, or the Ganga Fund. So is other than these 4, you can't transfer to any other fund unless central government or MCA comes out with more funds to be prescribed. As of now, the state funds are not prescribed. So that I think answers the first question. And as far as the second question is concerned, if I understood you right, so your question is whether if a company's CSR obligation comes down below 50 lakhs, whether they can disband the CSR committee. Yeah, so actually the provisions are as of now conflicting. If you look at Rule 3.2 of the CSR rules, that still remains in statute books, but strictly speaking, that should have been removed long time back. But it says that every company which ceases to be a company covered under Section 135(1) of the Act for 3 consecutive financial years shall not be required to constitute a CSR committee and comply with the provisions contained in Section 135(2) to 135(6) till such time it meets the criteria specified in Section 135(1) of the Act. So that means there they talked about 3 consecutive years. But if you look at 135(1), where it provides regarding the constitution of CSR committee, there also that it talks about the time frame within which the CSR committee and CSR spending can be discontinued. But what is more important is the statutory provision under Section 135(9), because there it says if the amount to be spent by the company under 135(5) does not exceed 50 lakhs, the requirement of constituting a CSR committee shall not be applicable, and the functions of such committee shall be discharged by the board of directors of the company. So which means here, if the obligation goes below 50 lakhs, then you have a right to disband the CSR committee immediately, and you don't have to wait for 3 consecutive years, number one. And another point to be noted is whether that 50 lakhs obligation is for the previous year or for the current year. Here, for the current year. So if the current year's obligation is less than 50 lakhs, then you need not have the CSR committee. So you can disband that CSR committee. And the third point to be noted is whether, suppose there is an obligation to spend less than 50 lakhs, but let's say you have spent more than 50 lakhs. So whether you are allowed to disband it. So here, because the obligation is less than 50 lakhs, you can disband it because voluntarily you have gone for more than that. And you can also look at it the other way around, where let's say you have spent less than 50 lakhs, but your obligation was more than 50 lakhs. in that situation, you cannot disband that CSR committee. So I suppose I covered three, four scenarios.
All the three questions you have covered. My next question is to Sanjeev ji. CSR policy of a company has been framed only to carry out activities under education and health sector. In such case, in case a company contribute to PM CARES fund, will it qualify for CSR activity? That is, in your annual action plan, in case if you are not covering a particular sector and at a time of making the payment, you are making a social CSR in a different sector altogether. That is the first question. Second question is, in any manufacturing company, trainees by a third party in the manufacturing activities and reimbursing of stipend of the trainees to third party, can it be treated as a CSR? That is, I think, administrative overheads we are talking about. Whether these trainees expenses, whether it could be treated as an overhead expenses or employment enhancing vocational skills, or the conveyancing, the travel costs, the staff welfare, which is incurred by the company during the course of the identifying and selecting CSR, whether this would be considered in an administrative overheads. These are the three questions to you, sir.
So taking the first question, I think they are referring to the PM CARES fund, which is already given under Schedule 7. But the same point came to our policy also in our company. And the objective of our CSR committee was not to donate the funds in any of the funds as specified, take the projects and complete that. So if these funds, the contribution under Schedule 7 has not been specified in the CSR policy, my personal view would be, if you want to do that, just amend the policy, take that, the funds into the policy for contribution and then contribute, rather than straight away going on without mentioning in the policy as such.
Okay.
What was the second point?
The second is the expenses with regards to the training, whether and expenses with regards to the traveling, expenses with regards to conveyance, whether it can be treated as an administrative overheads.
I think the second point, which is towards expenses toward travel while identifying the CSR projects, etc., it can be taken as an administrative expenses, no doubt about it, because it is being done for the purpose of finalizing your CSR projects. As far as the first part is concerned, I think they are referring to the cost of the apprentices.
Yes.
For that.
Yes.
Right.
Yes.
And they are saying that can it be considered under the administrative overheads?
Yes.
So that can't be that,
because it comes under employment, vocational skill development for that purpose.
Correct. That is there, but as I said clearly, that if the company or the establishment is covered under the Apprentices Act, and you are taking the apprentices over and above the 2.5% of the manpower, which is the minimum requirement, and this cost is over and above that 2.5%, then you can consider under the CSR activities, otherwise not.
Okay. My next question is to Pramod ji. The first question is, if a company wants to spend a CSR for building classroom, is it proper compliance to transfer the cost of funds to the trust and get original bills? How will transfer of capital assets happen in this case?
If I understand correctly, it is capital asset creation through trust.
Yes.
Then there is no issue while the amount is being transferred to the trust and expended and original bills are obtained. As far as transfer of asset is concerned, it will be directly registered in the name of the trust itself, and relevant provisions as required under Rule 7.4 with regard to income tax, stamp duty, etc. has to be complied with.
Okay. Okay. My next question is to Satwinder ji. This is with regards to question, if CSR obligation for the financial year have, I think that is already dealt by Sridhara sir. I will go to the next question. Can a company spend its project or program related to activities mentioned in Schedule 7 to the Act, but not specifically covered in CSR policy. I think even that has also been covered by Sanjeev ji now. Whether distribution of free samples to, I think I should ask this to Pramod ji, because they are in Nestle and they also supply various free samples of products. So let me ask this particular question to Pramod ji, whether distribution of free samples to customers, can it be considered as a CSR activity?
It's an interesting question, and you said that I work for FMCG, so the free sampling is yes, indeed, very much happens in FMCG sector. However, it will fall under the normal course of business, and hence it may not be considered as CSR activity now, especially after the clarification which was issued on 25th of August 2021 by the MCA.
Okay.
Maybe I can just add one, supplement that point. I think, of course, what Pramod has mentioned is absolutely correct. But there's one more clarification which has come in MCA, which says that for qualifying as CSR expenditure, it has to be a CSR spend. So unless it is a spend, it cannot be a CSR expenditure. So free sample, there is no expenditure by the company, and therefore it will not be coming as a CSR expenditure. So I think by two FAQs, I think MCA has answered this question.
Okay.
And absolutely, you are right. It becomes something in kind, and
Yeah,
it is
in
not
kind.
something which is spent.
Correct.
Okay. My next question.
I think, Sridhar sir, if you, because you chartered accountant, if you see the accounting treatment which CA have given, they have otherwise considered it, but thankfully, you see, even I had a discussion with Pramod also that how, like I was saying that, okay, I will, if I am in Nestle, I will not do the Maggi, but I will use something else to distribute because it is to be spent. I can't in the ordinary course which we are saying, but that's the way the law is law now, because there are clarification to that extent.
Yeah, only to the extent that the CA Institute, that technical guidance which they are given was a little before the FAQs given by MCA. So to that extent, they have become a little outdated.
I had detailed discussion with the joint secretary when we had a joint discussions, but that's a view which Ministry has taken, which we were discussing. The other question,
Satwinder ji, one question. I
think the question which you raised it to Pramod on that building, that is an interesting question. I think we need to also see, because is it the trust property? Is it the property of somebody else? You have taken it on lease. I think that also add on to certain other questions. If you see the issues under the Transfer of Property Act and other things, if the land is with me and you are you see building classrooms on that, so there could be the trust, land must be owned by some other person, or the land is of the school itself, right? I can't create a capital asset in the books of the company, but where that is. So ultimately we also have to see if it is a whose property it is, and then we have to see that, because there are certain judgments to my mind where they were saying that, okay, whose land is. In normal books, we put an entry to this thing that, okay, the building is mine, the land is somebody else. But where the, you see the building is created, ultimately under that, the Transfer of Property Act and you see on those issues. So there could be the related issues which I thought that, okay, one can look at it holistically. Because
yes, and to supplement what Satwinder ji you are saying, there could be many possibilities where
yes.
of managing the property on which classrooms are being held. It could be lease, it could be short lease, it could be sale, it could be hypothecation. It could be many possibilities where.
No, I'm just raising this question, Pramod, is because the person who might have raised it, which Nagendra has picked it up, is that one must look into the entire facts. Why I'm saying is that, okay, merely you
that's the limited extent of
that should not be the final. One has to see to it the facts and then opine on that part. So yes, that's a personal view, but depending on clarity of that facts.
Okay. I think I will. Next question is to Satwinder Singh ji. I think this is one of the most important and important question which I feel whether all companies who are eligible to carry out the CSR activity and they are spending in the normal course of business, whether it will be considered to be a CSR activity. To give a simple example, say for example, you will find an industry which is using, say, fossil fuel, now convert itself into solar energy, for example. Whether that amount which has been spent for the solar, whether that would be covered under the CSR activity?
No, but if it is in the normal course of business, that will not be taken it up for this. So if the company itself, like the one question which comes and is that whether the company which is already into a charitable objects, like a Section 8 company, right? Now, whether even the CSR would be applicable. If I see the MCA circular, probably they said it is applicable to all the companies, right? Now that there are larger questions to it. I understand that, okay, that is there, which we are debating, and we respect the decisions for that. But ultimately, and that matter had gone to high-level committee, they are taking it is. But then there are other issues. If I am seeing the charitable activities, then probably it is the net profits. And if it is the, say, a Section 8 company, there you will have the income and expenditure statement, whether the surplus over the expenditure, whether it will be treated as an income or not. Then the other question which will come is that I get my certification that if any surplus, it has to deploy within that. So is it that, okay, I'm making a variation to that extent of that CSR expenditure, which I can deploy the surplus to the extent of 2% over and above. So could be the related questions. Then you see, these are the questions depending upon the one scenario you have given, the other scenario I am giving it. But probably I see to it is that, yes, still there are certain questions which have been answered under the FAQs, and we respect that, but could be the related other legal issues which may arise, and one has to sort it out for that.
Okay. Though we are running out of time, there are many questions which are there. Maybe one couple of questions we will say. My question next to is Pramodji. Can creating provisions in the books of accounts for CSR expenditure tantamount to meeting CSR obligations?
See, as far as Section 135 is concerned, creation of CSR expenditure in the books of account is not the desired intent. It is the amount which is spent is what is allowed as a So the answer is no. Clearly, if at all there is a creation in the books of account, but not actual expenditure.
Okay. My next question is to Sridhar sir. Whether companies normally are organizing various preventive health camps, awareness programs, exclusively for their business associates or dealers or vendors, whether that amount would be considered as the CSR amount or a CSR activity?
Sridhar sir, you are on a mute.
Yeah. Am I audible now? Yeah.
Yes.
Okay. So this is a bit of a gray area. If you look at only the legal provisions, there is no bar for treating this as a CSR expenditure, because whether it is a normal course of business or not is a debatable point, because what you are giving it to the business associates, it cannot strictly be coming as normal course of business. However, to be on the safer side, by way of abundant caution, since we have to go by spirit also, I think probably we should avoid taking it as a CSR expenditure.
That Sridhar sir, actually we have already covered under a guidance note also.
Yeah.
And we have given the guidance that it should not be treated as a CSR expenditure.
Yeah, but strictly speaking, legally it is allowed. But only thing is, to be on the safer side, I think we will take it as not CSR.
Another point, which we were discussing earlier was the contribution in kind, which cannot be monetized. Now, for a company like us, suppose we are taking a project for, building hospital. and we want to give, the vans there, the ambulance, and we are manufacturing car. Suppose we want to give Ertiga as an ambulance to that hospital, will it be allowed as a CSR expenditure? Because I can't use, I cannot monetize something which is not in cash. Though the hospital project is of mine and it is under the CSR activities. So do I need to then pay cash to the hospital and then they will purchase the van from us? That is another issue which is coming to us now.
Sanjeev, I think just taking it is because if you see even the Supreme Court judgments, they also say that you have to see to the end use. Probably these are the issues when we are talking about the spend and it has to be in monetary terms or in kind, that those are the issues. But like Siddhar sir is saying that you see the expenditure to be incurred on the this, whether it could be there, again that's end use. The end and intent is whether it is only to a specified class which is benefiting your work or it is at a public at large. I think that's the important question. I am just placing it.
Correct.
Maybe that, okay, we can further discuss it in the expert group and take it forward.
Sure.
Satvinder Singh, since I would like to ask one more question to you, whether Section 8 companies are also to do a CSR activity?
That's what I was saying, sir. This is what I am saying is that's a question. If I see the high-level committee, if I see the MCA circular, they says it is applicable to all the companies. Now, one view which they are taking it is that there is a possibility that the activities which Section 8 companies doing is not in line with Schedule 7 activities, let's say, or it is not as per this. That's a one part of it. The second question which is coming up is that if I have to spend, then I have to come back to the definition of net profit. Because that Section 8 company, there is no, you see, profit and loss, it is an income and expenditure account. Now, whether the surplus over the expenditure, whether it will be treated as a net profit, that's another question which is there. If that question is there, then I am getting the accreditation of Section 8 company with the undertaking that if there is any surplus, it will be flow back only to the objects for which I have formed, right? So then if that object, then it will be coming in the ordinary course and you are not going to the CSR. So there's a dichotomy to that extent. But if I take the view which MCA has taken it, that's fine, that okay, then it is applicable even to Section 8 company.
Okay. Now I would ask the last question to Sridhar sir. Who can conduct the impact assessment?
Yeah, impact assessment, there is no particular authority which has been defined in the rules. So it can be any independent agency who can conduct the impact assessment. Only thing, it should not be related to the implementing agency or to the company. It has to be completely independent. In that case, they can conduct the independent impact assessment.
Okay. I think I will ask one more last question before we finally conclude to Pramod ji. What is the impact of BRR reporting as far as CSR spends are concerned?
So, as far as business responsibility and sustainability reporting is concerned, it remains completely separate. We should avoid duplication, even in terms of formation of committee, CSR committee versus the requirement of a committee which looks after BRSR under the listing regulations has to be, according to me, kept separate. We should formulate a separate, constitute a separate sustainability committee, which will not have any duplication of work with what CSR committee does. As to sum the question, it is a statutory obligation. CSR is a statutory obligation, while BRSR is a disclosure requirement, wherein we have to give disclosures on the basis of 9 principles, and they are divided into different set of disclosures. So it should not be mixed with, and I don't see any duplication between the BRSR versus the CSR provisions.
Okay. Let me take this opportunity to thank each and every one of you, to Satvinder Singh ji, who negotiated the turbulent time with regards to the various questions which were posted, as well as to Sridhar sir, Pramod ji, Sanjeev ji, for negotiating all these questions which have been raised by our beloved members of our profession. I am sure that with all these turbulent questions, we had a smooth landing of the various provision, the standards which have been led so far as the CSR is concerned. And I am sure with the MCA FAQs as well as the guidance note issued, let me take this opportunity, dear members. Let me, as a immediate past president of ICSI, when I was president ICSI, I would like to thank Shri Satvinder Singh ji, because I remember Shri Gyaneshwar Singh ji at that particular point of time, Joint Secretary of Ministry of Corporate Affairs, who was heading the CSR. He had requested few names and who wanted to throw more light on CSR. Let me thank Satvinder Singh ji for coming forward and being part of ICSI in that particular committee and steering effectively and ensuring that the corporates which at that particular point of time faced certain turbulent questions, and at that time also he negotiated very well. I wish to thank Shri Satvinder Singh ji, Sridhar Jayaraman sir, Pramod Rai ji, Sanjeev Grover ji for an excellent and a lucid presentation of CSR. I am sure that your lucid presentation as well as answering to all the questions, our members would be honing more skills and they are more equipped today compared to those questions which were lingering in their mind. I would also like to thank our directorate, Saurabh Jain ji, Rakesh ji, and all the technical support which has been given by the IT team. Last but not the least, I would also like to thank all the esteemed members who have joined this particular session despite being a weekend. I'm sure that today's webinar on the topic of the CSR, celebrating the ICSI Secretarial Standard Week, is a great success, and I'm sure that we all, not only with a letter but also spirit, contribute for the cause of CSR. Thank you very much. Let us once again meet at an appropriate time on various other occasions. Let me thank once again each and everyone for participating for this webinar. Thank you.
Thank you.
Thank you.